Libertas 7. Today, Alexandra and Javier are going to talk about an investment case which has increased by 30% since Tenvalue began covering the company. However, looking to 2028, if you sum the parts of the estimated valuation of the main assets and subtract the gross debt, you get a value close to 4 times higher than the price reflected by the shares. That firm is Libertas 7. There are clear levers for the price to approach the value of the business, as they will explain in this video. We believe that the upcoming strategic and dividend plans will be very attractive, so that investors can wait for the discount to close, knowing that they will receive attractive dividends regardless of what the share price does.
The company has 3 business segments. A real estate segment, around 20% of the estimated value of the assets. In this segment, the company has a development business called Fixa, whose sales are expected to grow considerably over the coming years, going from 33 homes registered in 2023 to more than 100 estimated for 2028. According to our numbers, this development business has a value close to 10% of the total value of the company. The prospects for the development business are very good given the strong demand and the lack of supply in the real estate market. We estimate there will be very attractive operating margins in the coming years. Specialization is very important, and Libertas 7 specializes in the Valencian community. In fact, it is a well-known local developer. The company also has buildings and premises in the center of Valencia for a reasonable book value of over 15 million euros based on independent appraisals. Most of these properties are rented. Second, the tourism segment, about 20% of the estimated value of the assets. The company owns 3 buildings under a vacation rental regime located in the Port Supply complex in Valencia for a reasonable value of 22.4 million euros, according again to independent appraisals. It also manages a 4-star hotel, in this case under management, not ownership, with 42 rooms in the Port of Valencia, the CU Hotel. We consider that there is hidden value in the tourism business in addition to the value of the buildings. Since the occupancy rate is currently close to 50%, there are clear levers for it to increase to at least 70%, and there is also capacity for price increases.
Libertas 7 also has an investment segment, about 60% of the estimated value of the assets. Its activity consists of investing both in listed equities and unlisted companies. In this division, the company has around 60.5 million euros in assets. Nearly 50 million euros are invested in securities such as Vidrala, Viscofan, Louis Vuitton, and so on. The company follows value investing principles. And the portfolio the portfolio is managed professionally by its management team and its own structure of analysts, and they have a track record of over 20 years. Then it's also important to bear in mind that when calculating returns achieved, if we assume that those dividends paid by companies in their portfolio, if they had been reinvested in the portfolio, returns would have been higher than the main benchmarks, both in Europe and in Spain, which is outstanding. Around 10 million euros is mostly invested in private equity funds that invest in unlisted companies and, to a lesser extent, in stakes in other businesses. The objective of this business area is to increase the size of the portfolio whilst generating liquidity and returns for the medium and long term. In recent years, this portfolio has grown substantially thanks to the increase in invested resources and to the good returns achieved by the management team. We expect very good medium and long-term results going forward in this division. The investment division is led by Jorge Perez, who has a very rational and long-term vision of investments. He also has a solid academic and professional background, and the same can be said of Jose Tormo, Director of the Tourism Division, Carlos Gil, Director of the Real Estate Division, and Juan Diego Lozano, Director of the Internal Area. There are no conflicts of interest. The Noguera family controls around 80% of the shares, and Agnes Noguera is totally focused on supervising the whole team and making sure that work is carried out efficiently and for the benefit of all shareholders.
Regarding the price, as we mentioned at the beginning, it is very far from the value of the company. Let's see line by line relevant data about the main divisions in Excel. Regarding the house building business, in addition to looking at the historical income, we can see that profits have not been very good in recent years. This is because of the low turnover due to the economic context and the origin of the land used. That is, land purchased at prices higher than the current market in a previous real estate cycle. To obtain the expected future income, we have taken into account the new homes that are going to be built at the expected average price. We have assumed a 15% margin, which we think is reasonable considering the margins of other companies in the sector and that the sector has clear tailwinds given the shortage of supply and the strength of the demand. For rental income, we have assumed annual increases of 5%. In the tourism business, we assume that occupancy will go from 50% in 2023 to 70% in 2028, and that price increases will be 5% per year. Taking into account that around 60% of the increases in sales go to profit before taxes, we can easily calculate the expected profit before taxes. Finally, to calculate the pre-tax profit of the financial area, we have taken into account that in the private equity portfolio, they estimate obtaining a return of 2 times the cost of the investment in the medium term. Since 8.5 million euros have been invested, we assume that over the next 5 years, the company will obtain 1.7 million euros, 1/5 of what was invested. With all this, we can have our estimates of the balance sheet and income statement as well. In line with recent years, we see that estimated cash generation for the coming years is going to be very good, which, as we show in our estimates, even allows the company to pay a high extraordinary dividend while increasing the value of the assets. It must also be taken into account that some of the traditional ratios are not representative of the reality of the business. For example, the net debt to EBITDA ratio is close to 9 times. The securities portfolio is completely liquid, and although it is not taken into account to calculate the net debt ratio, it could be sold and used to repay all the debt. Nor does the accounting EBITDA reflect the reality of the business as a whole, since the capital gains of the equity portfolio are recorded daily in equity, according to IFRS 9, without going through the income statement, except for short-term trading operations. This fact also affects the calculation of other ratios such as return on equity, return on capital employed, etc. As a curious fact, the value of all the financial investments and liquidity, 60.5 million euros, would practically cover the total amortization of the group's debt, which is 33 million euros, and the purchase of the company on the stock market, close to 30 million euros, leaving the remaining assets in other divisions, all of them growing and profitable at 0 cost. Let's go directly to the valuation by parts.
We assume a price-to-earnings ratio of 10 times for the real estate development business, lower than the sector average of 13 times, and we will review it as the company meets expectations over the next few years. 5% annual revaluation for premises and buildings in the center of Valencia. Last year, the price revaluation in Valencia was 15%, according to Fotocasa. The same for the tourism division buildings. We estimate a normalized profit for the tourism business, excluding the value of the buildings, and apply a multiple of 15 times, which is the historical average multiple of the stock market, which seems reasonable to us, considering it is a business with tailwinds and entry barriers. We assume an annual valuation of 10% for the financial portfolio. We add the associates, other long-term financial investments, and the cash. We subtract the debt, 144 million euros compared to the current price of 30 million euros. Even if we lower the estimates considerably and assume a 5% annual growth for the securities portfolio and a 3% annual asset revaluation, the estimated value would be close to 124 million. That is close to 4 times the current capitalization. As we mentioned, we see levers for the price to get closer to the real value of the business. We estimate that the real value of the company will continue to grow in the 3 divisions at an attractive rate for investors, since they have high quality property assets and the 3 businesses are well positioned and managed and have clear tailwinds. Management is committed to increasing asset value and rewarding shareholders attractively through dividends. We believe that the upcoming strategic and dividend plans will be very positive for investors. On our website, you can see our executive summary, report, and Excel of the company. We hope you find the information interesting.